first stage of the rally, the investor focus will be more on the big cap internet companies as a more liquid names, direct beneficiary and a proxy to a China play. I think this is the first stage that they will benefit. The smaller cap names depends on what kind of a vertical, what kind of exposure they are in. Because some of the smaller cap companies, they are exposed in the sector where either you're being losing market share to big player, or that subsector actually see a more difficult or slower growth environment. So I think first stage, from a trading point of view, the big cap names will generally outperform. And then the smaller cap names, I'll focus on names. A lot of names have traded very depressed valuation, and some are even trading at very close to cash value. And then the second will be some subsector which is still have a decent, solid growth potential.
Right. I also want to get your sense from a valuation standpoint. Do you think there is more headroom for some of these companies which have already rallied quite a bit? So a case in point, and I know that you can't take stock names, but for example, Alibaba, right? It's already gained about 20% plus from the move that we witnessed 3 months ago. And it's had such a good run year-to-date as well. That's the case with Tencent as well. I know the year-to-date performance has been very promising. I wonder how much more upside there would be on a price-to-earnings multiple basis, forward earnings basis for these businesses. What would be fair value? Because they were also beaten down in the last 2 years bear market.
Yeah, like you said, I think the past one and a half year, they have been trading a very depressed valuation. So the past few weeks is kind of like normalizing part of the valuation. So this is one thing. Second is that if you think about the valuation, this company, if you factor in some earning growth, margin expansion, and also some EPS growth driven by their share buyback, they generally deliver around like a mid to high teens EPS growth on general for the sector. And sector overall trade around like 14 to 15 times PE, so equivalent to roughly 1 time PEG ratio. Historically, for the sector, during the very depressed time, around like 0.7 to 0.8 PEG, and then during the recovery time or more bullish time, roughly around 1.3 to 1.4. So we argue that given the stimulus is gradually coming, so that both the earnings and growth still have upside. So if a PEG of currently 1 times, I do think there's gradually some upward revision there, down the road, especially the street haven't really factored in the benefit from this macro stimulus.
The last question I want to take on this particular subject is, what is the big risk of investing in internet companies in China right now? And where does regulation stand with regards to ensuring that it's fair play for all of those companies from a consumer standpoint? There's enough consumer protection by way of either the expansion plans or the price at which they're selling products?
I think in terms of regulations, worse is slightly behind us. The peak of all these regulation rectification to create a more favorable competitive environment, a fair competitive landscape, like the antitrust regulations, the protection on the minors, the protection on consumers. We have seen this over the past few years. And now the government is more pro-growth, and the operator are also more compliance with the regulation as well, and undergone a lot of rectifications. And you can see, like for example, the number of new banhao, the number of new games approved by the government have been normalizing. The quality of game, the number of games being approved has a very steady and predictable level. So I think overall regulation-wise is more being supportive overall and more pro-growth. And then in terms of the risks, obviously, like you mentioned, these companies are to see business after all, right, to consumer. So they are very contingent on the macro recovery pace overall, be it like e-commerce, food delivery, local service, advertising. They are all very tied to the macro. So I would say we still have some bottom-up support from the industry-wise, like the easing competition, the improvement of margin, but after all, it still depends on the overall consumer sentiment.
Got it. Wonderful to have you on the show, Kenneth. Thank you very much for joining us with your take on the internet companies in China. More earnings out of South Korea, and we are watching the index's third biggest heavyweight, LG Energy Solution. Sherry Kang joins us with more. Sherry, good morning.
Good morning, Tanvir. So the battery heavyweights management sounding very cautious. I mean, they're saying it themselves on the earnings call. The management saying that they have a conservative view